Welcome back YouTube to Art Capital Options Day Trading Mentorship Class 9. Today we're going to be going over stocks to monitor and market correlation. Using everything that we have gone over in our previous classes, we're going to sum it all up and show you guys how to look for market correlation between different sectors, between different individual stocks, and pairing that along with the indexes. Let's get right into it. Alright, you guys can see my screen, right? Cool. The complete picture, adding market context, market intelligence. You have technical tools. Now learn which 12 stocks to watch daily and how they move together. Your complete system so far. Class 1 through 3, foundation. Option basics, price action, timing. Class 4 through 6, support and resistance, arc clouds and VWAP bands. Class 7, confluence zones and system synergy, putting it all together to find those sniper entries. Class 8, key levels, previous day high, previous day low, previous day close, gaps, psychological levels. Class 9, your daily watch list. Today you learn what 12 stocks to monitor and why. SPY and QQQ correlation is the key to high probable trades. You want to do this real quick?
Which one, the next slide? Hold on, my computer's a little messed up. Your ARC system watch list. So 12 stocks, your complete daily watch list, right? You have 8 core stocks plus 4 from your daily pre-market analysis class, right? So that might be, let's say you tune into my call in the morning and I'm talking about, for example, let's say Snow, right? Snow is not a stock that you see me trading every day, but if there's some, let's say they had some good news around them, or the daily chart is looking good, or there's a nice setup, let's just say on Snow, and it's something to potentially look out for, you want to keep those 4 or those new ones that you'll hear me say every now and then to the side, and you want to have those 8 core stocks that you watch and that you really start to understand and learn back of your hands, right? The non-negotiables that you must watch daily, this is very simple stuff, guys. SPY, QQQ. They should really be putting VIX in there. I should have put VIX, and we should have put IWM as well. DIA, right? Because these are all the indexes. But non-negotiables, especially if you're day trading, we day trade heavy tech stocks for the most part, and if not tech stocks, then some kind of stock in the S&P 500. So SPY and QQQ really do help us gauge the overall market sentiment and take trades based on that. And then you have your core individual stocks for Confluence. Oh, we do have VIX here. We have VIX, we have Apple, NVDA, AMD, PLTR, Tesla. And then you have your 4 custom stocks. Now, these are the stocks that, let's say you're looking at the previous day and you're looking at, let's say your hypothesis or your theory is going to play out. If you think that if this stock breaks over this level, and then you see in that pre-market, it's trading right underneath that level, you're watching it that day to see if it breaks over that level and gives you a potential opportunity, right? So add the 4 stocks from our daily pre-market call. Every morning before pre-market, I discuss which stocks are in play based on news, earnings, sector rotation, and just current market sentiment, right? 7 years in the market, I really started to understand how money is moving and to spot out when it's slow for tech and when you should really look into other stocks versus when you should really be mainly focused on the tech stocks while every other things are lagging, right? You can see the exhaustion. You see the money's been flowing right now we have a lot of money in energy, oil, war stocks, obviously. That's really when the money is. Tech has been very choppy the last few weeks. All the high beta stocks, all of the high PE stocks have been taking a hit. Have been having these super volatile moves or been getting beat down, right? Anyways, your job is to add those 4 stocks to your watch list and check their correlation against SPY and QQQ throughout the day, right? So the total that you should be watching, you have your 8 core stocks, your 4 custom stocks, so the 12 stocks daily. If you're trading on a computer, guys, and you have 2 or 3 monitors, 12 charts is very doable on one screen if you have a wide screen. And if not, 2 screens, 12 stocks is very acceptable, very doable. The 4 custom stocks change on a weekly basis or sometimes on a daily basis. Right.
I don't want to cut you off, Rich, but there's going back to what you were saying before with like knowing where the money's going. There's always a story. So whatever the story is, this is what those 4 custom stocks are going to be. Whatever we discuss in the pre-market calls, whatever the current story is, it's pretty simple.
Real life, well said.
All right. Here. So let me go forward here. SPY, the non-negotiable number 1. What is SPY? The S&P 500 ETF, it tracks the 500 largest US companies. This is the market. Why is SPY non-negotiable? Market direction. If SPY is bullish, most stocks will follow. If SPY is bearish, most stocks will fall, period. It's as simple as that, guys. If you're going to be looking for correlation, and this is going to help you trade those individual stocks and have more confidence when you're maybe not trading SPY, you still can use SPY to your advantage even if you're not trading it. So the second reason why it's a non-negotiable, it's because it has the most liquidity, it has tightest spreads, instant fills, massive volume, and the cleanest chart to trade. All tools work best on it, so our indicators like the arc clouds, the VWAP bands, and all of our levels like gap levels, previous day high, previous day low, previous day close, support and resistance, everything is most reliable on SPY. And the fourth reason is because pure market sentiment. No earnings surprises, no CEO tweets, just pure market direction. You're getting what the investors are psychologically feeling. Whether it's indecision, whether it's everyone's happy, everyone's making money, the economy is good, and people are investing, right? So, trading rule. Never trade against SPY's trend. If you're bullish on a stock but SPY is crashing, wait. It's always better to wait for them to correlate together simply because it's a game of probability. If SPY controls the whole market or is a sum of the whole market and you're trading an individual stock that's doing the opposite of SPY, you're going against what the whole overall trend is, right? Which isn't highly probable. I'm not going to say that it won't work because there are cases where stocks receive some sort of news and they do the opposite of SPY. Meanwhile, the whole market just doesn't care and just continues on whatever trend that it was in, right? So, not saying that it won't work, but if you want to play it safe and you want to be only taking high probable trades, you should wait until they are correlating, all right? You want to go over QQQ?
So QQQ, the non-negotiable number 2. What is QQQ? Is the NASDAQ ETF, right? Tracks the 100 largest non-financial companies. It's the tech-heavy ETF, just like SPY, very high liquid. Why it's the non-negotiable? It's the tech sector leader. 70% of QQQ is tech stocks. If tech is moving, QQQ shows it first. Tech stocks being, you have your mega caps, Meta, Microsoft, Amazon, all those stocks, right? And then you also have your stocks like MU, NVDA, AMD, all the semiconductors, everything around technology. QQQ focuses on a high growth focus, right, for these stocks within. NVIDIA right now is trading what, 40, 50 a profit to earnings ratio, right? Not even to say it's overvalued, it's just these companies, right, have massive profits and can have these extraordinary moves, really super volatile, right? As we can see in software lately, software stocks have been getting absolutely crushed to start this year, right? Absolutely crushed. Negative 60% from the highs. Now, if a stock is going negative 60% from the highs, that's a very volatile move. Imagine buying the stock at the highs and owning it, and you're down 60% on your investment, right? Or imagine shorting it. Huge potential moves. High volatile sector gives you super high volatile moves, right? It's more volatile than SPY, bigger moves, faster profits, just in QQQ and also within the sector as well, right? Tech stocks are often known as the most tradable stocks, right? A lot of big tech investors, a lot of big money, a lot of older investors, right? A lot of boomers. They're not the biggest tech, they don't have a tech heavy portfolio, to say the least, right? They have a more protective portfolio rather than somebody younger or really somebody who's in the tech space, because a lot of people don't really understand it. And people don't invest in what they don't understand, right? We're younger, so obviously we know power of AI, Meta, we know how all these companies are moving, making money, so we like it. It's also a leading indicator, often moves before SPY when it comes to the tech stocks, can predict broader market direction, right? So it really, we use it hand in hand with SPY. We use it hand in hand with SPY to really judge the overall market. If they're trading in tandem, right? And you have, let's say you have a bullish bias, right? And you see SPY and QQ are both pushing up aggressively, right? Giving you a nice uptrend. That bullish bias is valid. That's a double confluence because they're both correlating. And now let's say you want to take a trade on a tech stock, or they're both correlating, wait for that entry and attack, right? Perfect for day trading, excellent liquidity on QQQ, respects its technicals, and has its clear trend days, also has its choppy days, but really excellent liquidity. You could always get filled in a matter of a second. QQQ contracts trade within, it moves by the dollar, right? So if you buy something at 0.50, 50 cents, and you buy 500 of them, it moves by 0.51, 0.52, but moves by dollar increment. So if you're trading, let's say big money, and you're buying 50 contracts, right? And you're selling 5 contracts every 10, 20 cent move in your favor, right? That's a scalping strategy that people use. You have excellent liquidity on these options because there's so much volume and so much liquidity behind QQQ and SPY, right? So it's perfect for day trading. SPY versus QQQ correlation, when both move together, is maximum confidence, right? When you're seeing both of them move in the same direction, you want to be taking a trade in that same direction. It's very simple, guys. You, for the indexes to tell you the story on when you're day trading, you wait for the indexes to tell you the story. Is it bullish? Is it bearish? Right? You either look for your stocks within the sector that have the nicest setups, that are breaking key levels or whatever. You do your technical analysis. You find your list. You go through your stocks. We'll go in that a little bit. And if they are moving in correlation, then you should be attacking on pretty much everything, in my opinion. Right? You take your shots with maximum confidence. Now, if QQQ is leading SPY, if QQQ breaks first, could be that early warning signal that SPY is going to potentially follow, whether it's to the downside, whether it's to the upside. If, let's say, we're both ranging on Qs and SPY, and we see QQQ start breaking out to the upside, you could anticipate the SPY is going to move to the upside as well. Now, if you see that QQQ is moving to the downside and SPY is still sitting in the range, then you can anticipate that SPY is going to follow and come down as well, right? Let's go on to slide number 6. This is the VIX. Now, this is very important, guys. I talk about VIX almost every morning in my pre-market calls. It's very crucial to my trading and to your trading and to everybody's trading. No matter how you trade, whether you're a scalper, whether you're trade straight futures, whether you're a day trader, whether you're a swing trader, it does not matter what trading style that you thrive with, that you trade with, VIX matters. And you can use the VIX in so many ways. It tells you so many things. And it's really, in my opinion, another tool that we use that gives us a lot of confidence on our trades. Intraday, as a day trader, right? We're very versatile traders, right? We could swing trade, we could day trade, we could long-term trade. We do it all, right? Now, when it comes to day trading, we use the VIX very much so. Just it helps us in so many ways, gives us more confirmation on the direction, more confidence if we're seeing VIX breaks our levels to the downside and we're bullish on SPY. As I'll get into this, they're inverse each other, right? So VIX is the fear gauge, guys. What is VIX? VIX is the volatility index. It measures expected market volatility, otherwise known as fear or uncertainty, right? Now, how do we read the VIX levels? So if VIX is below 15, low VIX, market's in a very complacent area. It's very calm, right? There's low fear in the market. You have a lot more steady trends. Options are a lot cheaper. And in my opinion, this is the best time to trade, especially as somebody who thrives in a trending market. Whether the trend is up or down, we thrive on trending days. And when VIX is low and the market's bullish, the market has been all of pretty much after April up until around September. We had a massive bull run pretty much in all tech, and SPY and QQ had a very nice run, right, from April of last year to September, really, before things started to get a little more choppy, right? VIX was pretty much stable and sitting under that 17 area. Was really sitting down there, even came down to 11 here and there. I remember seeing it around then. When VIX is under 15, market's complacent, market's calm, market's not really too fearful, and you'll see a lot more trends and a lot more follow through realistically, right? When you see VIX at 15 to 25, trading between 15 to 25, you can kind of medium VIX, more normal volatility, moderate option premiums, trading in terms of standard trading in terms of
like price action movement, right?
Yeah, when it comes to price actions, you're going to see stocks respect the ATRs a lot more, right? So now let's say a stock's ATR, average range, whatever you want to call it. Let's say a stock's ATR is $8. right? That just means that the stock on a daily usually moves within an $8 range. So now let's say a stock is trading, opens up at 100 and then rips all the way to 108 in the first hour. Chances of it topping out at 8 is very high, right? So now when VIX is between 15 to 25, the market really does respect these ATR levels, and I could see how the algorithms respect it as well. Or it's market's still in a stable place, right? When VIX is trading between 15 to 20, really. 15 to 20 markets in a stable place. Now, when things start getting between into that 20, 25 zone, that's when options premiums can really start getting a lot more juiced, and we see a lot more volatility. Now, what do I mean by that? So now VIX above 25. Now I'm gonna really put this above 20, right? So like pretend this red box here says VIX above 20 to 25. Now, high fear and uncertainty is in the market. You're gonna see a lot of choppy and whipsaw moves. So now options are extremely expensive, but also what happens now, there's a lot of volatility. Now, what do I mean when I say there's a lot of volatility? Because that word gets thrown around a lot. When I mean there's a lot of volatility, I mean stocks. And when we say choppy and whipsaw means you have these very, very aggressive moves up and then very, very aggressive moves back down, right? And now let's say, going back to what I said about the ATRs, the average range, whatever you want to call it. Let's say a stock's ATR is $8 and VIX is trading at 25. That stock that usually moves $8, if the market's dumping, that stock can move $20, maybe $25, $30, triple, almost 4 times the average ATR that it's trading. Why? Because VIX is elevated. There's high volatility in the market. A lot of uncertainty equals panic equals selling, and panic selling is a lot of volume, and you have these sharp, aggressive moves down. And then sometimes followed by those sharp, aggressive buybacks. And you'll see those like reversions where we come down to a level, right? And it spikes. And then sometimes VIX even dumps or comes back. Let's say it spikes up to 26 and then comes back to 24. But as it's coming down to 24, the price bounced. Something big. The options pricing on the call side would have had a drastic move back up. And if you were short beforehand, but that bounce, you would have needed to take profits or you would have gotten smoked, right? We see these crazy moves and vice versa to the upside. You see that opening move up and then a huge drawdown and then a huge push back up and then a huge drawdown. Like we see these wild, sporadic moves when VIX is over 20 to 25, especially over 25 markets in a state of panic, and you will start seeing a lot of selling cases like this. Now, over the weekend, obviously, we had this war tensions and whatever, and VIX gapped up to 27. And of course, they do it over the weekend because they don't want people to catch it. And SPY gaps down to 672 and whatever, right? So when VIX is over 20 to 25, you want to reduce your size because option premiums are expensive. So when VIX is over 20 and the usual puts that you buy out of the money are usually 70 cents, now they're $200, right? You have to pay a lot more for these contracts, right? You have to pay a lot higher of a premium. So if you usually go in with 10 contracts, you're talking about contracts that usually trade at 0.70 when they're $2 to $3 out of the money, right? And then days when VIX is super high, $2 to $3 out of the money is now double, almost 3 times the price, trading at 200. You can't buy 10, you have to buy 4, and that's your max size, right? Or you even buy 2, and let's say you 0 DTE and you go negative 50%, right? Because that can happen. You're in a highly volatile market, right? It's very easy to get caught off sides. VIX is high like this. It's very easy for your option to lose 60 of its value, bounce, right? Let's go down to VIX and options premium, right? High VIX equals expensive options equals lower risk to reward. So now the example here is the SPY 500 call option. If VIX is at 12, the option usually costs $200. The stock moves to 505, you get 150% profit, right? Now let's say VIX is at 30 and the same option costs $5 in premium. So you just paid $200, right? $2 in premium, $200. It moves $5 in your favor. You make 150%. Now let's say VIX is at 30. The same option contract costs $5, right? $500. So a move to 505, you don't make anything, right? Because Let's say you're buying it, VIX is at 12, you buy the option at $200, it moves to 505, you make 100, you sell the contract at $5, you make 150%. If VIX is at 30 and you're buying the 500 call and then it moves 5 points, it's not going to be a zero profit. It's not going to be 0% profit. But let's say it moves $5 in the money, the contract might go from $500 maybe to $700. But realistically, that's only a 45% gain. And on a $3 to $5 move, usually SPY on a $3 to $5 move gives you 200-300%. But when VIX is high, those option premiums are high and they're not going to move as much as they would like volatility is low when VIX is trading under 15. Higher VIX equals pay more premium up front. You need bigger moves to profit big, right? To get those nice big percentages. And that just comes down, that just equates to a worse risk to reward. So it's really, you have to be calculated when VIX is expensive, when VIX is high, when VIX is over 20, 25, or even 30, let's say. You have to be calculated with what you are buying. Because if you're just buying something, you're literally just donating money, because a $1 move in your favor is not going to yield you 3, 4, 5%, and that's not worth anything. A $3, $4 move in your favor is only going to yield you 50%. That's not really good when they usually yield you 100% or more, right? The VIX trading rule is VIX moves inverse to SPY and QQQ. When the markets fall, VIX spikes. Use it as a confirmation signal, and vice versa. So when the market falls, VIX goes up. Now when the market rips, 90% of the time, VIX goes down. Now you have those days where, let's say there's a lot of news in the market, or like, let's say there's a potential FOMC tomorrow, okay? You could see SPY pushing up and VIX pushing up just because they have a major event the next day. That does happen. So understand that. But use it as a confirmation signal. Correlation is SPY dropping and QQQ dropping and VIX rising. This is a high confident bearish put setup, right? And vice versa, right? If SPY is dropping and QQQ is dropping and VIX is rising, that's a highly probable and high confidence bearish setup. And vice versa. If SPY is ripping and QQQ is ripping and VIX is dumping, it's a high probability call setup. Very simple, guys. Very simple. Real life. I'm sorry for taking so long on one slide, but I have to really,
that's good.
yeah, this is like your college class right here. No cap. This is years of doing research and watching the stocks as well, watching the price action correlating with VIX and QQQ and SPY and whatever, right? This is the game. So let's go on to the next slide. You got it, because I need some water.
Yep, no worries. All right, so the 5 individual stocks. Why these 5 stocks? They represent major market sectors and they correlate strongly with SPY and QQQ. The first stock that we have is Apple. It's the largest tech company. QQQ, bellwether and stable mover. NVIDIA is our second stock. Ticker symbol NVDA. AI and chip leader, high volatility, trendsetter. If you guys have been trading for the last couple years, especially around a year ago, it was a very strong leader, and it usually was ahead of any trend that the market was going to make, right? Next, we have AMD, Advanced Micro Devices, is in the semiconductor sector, correlates with NVIDIA, right? When you're also looking for that market correlation, you're looking for NVIDIA and AMD to correlate as well, along with all these other stocks. 4, we have Palantir, ticker symbol PLTR. It's a data and software company, high beta growth play. Here made a move today, actually, pretty significant move, a lot of volume. This stock, as of recently, with war, everything going around with the world. And the last stock that we have here, the 5th one, is Tesla, ticker symbol TSLA. It has high volatility. It's a momentum player, and it's very news driven. So, as you guys know, a lot of these recently have been introduced to my bad. They've been introduced to more DTEs often during the week. There's more expirations within the week. There's cheaper contracts that you can buy that do move more volatile and more like SPY and Qs. So if you're watching all of these and you're looking that maybe an individual name, one of these is giving you a cleaner move than SPY and Qs, maybe there's some news involving one of these stocks, you can trade them with the same that we teach here with the 0DTs with SPY and QQQ. So going on to the next slide here, what is correlation? Correlation is market agreement. So when SPY and QQQ agree, when you have a tradable market, individual stocks add extra confirmation, right? So kind of everything as a layer of confidence with the probability of your trade. If you have more things lining up, the probability is higher of your trade, and you're going to be able to take it probable more quality trades, right? So the correlation priority. Number one priority is SPY and QQQ alignment. If SPY and Q are not aligned, do not trade, regardless of what individual stocks are doing. Obviously, there's some exceptions, like we were just talking about. Let's say that an individual stock gets some huge news that affects the company for the next 3 to 6 months. Maybe something huge like an investment within the government or from another big company. That's something that you could take advantage of even when SPY and QQQ is not correlating. It's just not recommended to do that unless you're more experienced and you need these markets move, especially individual stocks. So good correlation, trade these. SPY and QQQ must be aligned above VWAP middle line. Buyers, that means that buyers are in control, or both below, sellers are in control, right? Both in green clouds or both in red clouds, right? You're looking for the confluence between the VWAP and the clouds, guys. That's going to give you your double confluence, whether it's to the upside or to the downside. And that third confluence that you're looking for to align is VIX moving inverse. So when the market is moving up, it's up when the market is moving down, right? Or down when the market is moving up and up when the market is moving down, right? It moves an opposite of what SPY and Q is doing, right? So the individual stocks add confluence but aren't required, right? So if you're looking at all these stocks, right, and 3 to 4 of them on your watch list confirm, this is a good setup. What do I mean by confirm? Prices in the same correlation as SPY and Qs when we're looking at it in correlation to the VWAP bands and the cloud, right? If 6+ of your watch list stocks confirm, that is an excellent setup. Even if only SPY, Q, and VIX align, this is still tradable if the setup is clean, right? Whether we have a level of support or a level of resistance or just a gap to fill and we see the buyers in SPY and Qs, if there's no correlation between the index or between the individual stocks, it is still tradable, guys, right? So what is bad correlation? Skip these. When SPY is bullish but QQQ is bearish, that equals market disagreement. Don't trade this, guys, right? We talked about it this morning. We were waiting for them to correlate, and as soon as they did, and as soon as the cloud started expanding, we took our trade, right? So the next bad correlation here is when SPY is above VWAP but Q is below VWAP. That means that buyer versus sellers conflict. Don't trade this, right? And the third bad correlation is when VIX is moving with the market instead of inverse. Broken correlation, do not trade, right? The simple rule is when SPY and QQQ are aligned, this is a green light. Individual stocks are bonus confirmation. When SPY and Q are not aligned, this is a red light. Don't care what else looks good, right? So it's better to wait it out and wait for a more high probable market. Want to do the next slide here?
Yeah. All right. So there's 3 types of correlations to check. All right. We have check. All right. So check correlation across 3 dimensions on the 10-minute chart for complete confidence. All right. So number 1, price above or below the arc clouds. Right. A high correlation example is SPY is trading above the green cloud. QQQ is trading above the green cloud. Apple is trading above the green cloud. And NVDA is trading above the green cloud. Those are 4 stocks trading above our clouds, right? In a clear bullish structure across the board, right? So what would you want to do in that situation, guys? You'd want to take calls, right or wrong? Chat, right or wrong? Chat.
Do them chat.
39 people in here, man, right or wrong? If there's a clear bullish structure across the board, what am I going to look to do if I'm a trader? There we go. I was about to say, nobody's typing. That's crazy. You're looking to take calls. You're looking for an entry, either off the cloud, right? Or if you want to get aggressive, you want to maybe off the cloud on a 1, 2 minute, 10-minute, 5-minute time frame, right? The smaller the time frame, the more aggressive with the stop loss you have to be. But we'll go over that in a little bit. A low correlation example is this, guys. Exactly, Nike. Wait for the pullback and enter calls. A low correlation example is this, guys. SPY is above the green cloud But QQQ is below the red cloud, right? This is a clear divergence in the market. Conflicting signals is telling you to stay away, right? Number two, if price is trading above or below the VWAP, the middle VWAP. So the key here is watch the middle VWAP line, not the top or the bottom band, the middle VWAP. If price is trading above the VWAP, buyers are in control. That's what it's telling us. The buyers are in control if price is trading above the VWAP. Now, if price is trading below the VWAP, that is telling us the sellers are in control, right? This tells us who has the institutional support currently, right? A high correlation example is all 8 stocks are trading above the VWAP on the 10-minute chart, right? All buyers are in control, strong bullish agreement across the board. If everything is bullish in the market that is on your screen, everything is moving up together, what are you looking for? What kind of opportunity are you looking for? You're looking to go long off the cloud. Clear stop under the cloud. Very simple. A low correlation example is if SPY is trading above VWAP, but QQQ is trading below, NVDA is trading below, and AMD is all trading below VWAP. Now that's equal. That's signaling mixed control. There's no clear institutional direction. Any trade that you're going to take is risky, right? If you're looking to take a long trade, calls, it's risky. If you're looking to trade a short trade, it's risky because QQQ and NVIDIA and AMD could flip positive. Or if you're looking to take calls on SPY, well, what if SPY flips and follows negative like QQQ, NVIDIA, and AMD, right? You have to look at all sides when you're taking a trade. And if you're looking at things like this, probability, if the probability is too high of a loss or a potential loss, then in my opinion, it's not a good trade, in my opinion, right? If SPY is above VWAP and you're looking to take calls, but QQQ, NVIDIA, and AMD are all trading below VWAP, the probability of SPY following QQQ, NVIDIA, and AMD and rejecting and coming down, it's decent. So if I'm not looking to buy calls, but at the same time, I'm also not looking to short, because what if QQQ, NVIDIA, and AMD start to find support? SPY continues to rip, and then QQQ, NVIDIA, and AMD base and start to move up. They don't continue down, they don't continue lower, and they catch up to SPY, right? So you have to, those are the times where you want to kind of on the sideline for a second. You don't have to leave and go back to work or whatever, especially if you're trading in front of the computer. You take a second, you step back, and you watch, and you wait. Maybe you wait an hour, maybe you wait 2 hours. But the patience, I had to say it 3 times, that's what's really going to help you and help your edge and really give you that clear entry, right? Because you'll start to see, okay, QQQ, NVIDIA, and AMD do start to push up and go positive and start trading above VWAP in the next 30-minute candle, right? Number 3 is respecting key levels, right? So key levels is previous day high, previous day low, previous day close, or any key level that you have on the daily, right? Daily time frame, weekly time frame, whatever area of support or resistance that you have. A high correlation example of this is, let's say multiple stocks are bouncing off of previous day low support. Specifically, if you see this on SPY and Q, this is a strong level validation across the market. So now you can take a bounce play, you could take a call trade against the previous day low with your stop loss under previous day low. Those are some really nice mean reversion trades. So those are the trades that could potentially start to work instantly. And if they don't work instantly, right, your stop is right under that previous day low. It's very simple, but you have to respect the stop. Because if it gets under previous day low, the chances of it continuing lower is high. And you'll get hurt even more. PDC is previous day close. So it's where the stock closed at the previous day. A low correlation example is SPY respecting previous day high, but QQQ breaking through, right? Level not validating, unclear momentum, right? If they're not in sync, right? Maybe you see QQQ breaking through, okay, strength is in tech that day, and SPY is maybe chopping around. So maybe you look more at tech stocks, but it's low correlation, right? The best trades that you're going to take are trades in sync with each other. When market easy, you go hard. When the market gets hard, you go easy, right? We say this all the time. Previous day low and previous day high, say on a Monday, have any correlation to price action on Thursday, as if I left those levels there. So now, in my opinion, because you got to realize Monday is the opening print to the weekly candle. So if you break over that Monday high, then that weekly candle flips green. You could be momentum. In my opinion, yes and no. It really is. I would say yes because recent levels, in my opinion, can potentially overtake levels. You know what I mean? Like when trading in this crazy SPY range, um, what is it? 670. What is it? 674. 670. What is that level that I have? 676, 675 area, and that 690 area. Right. So every time that we're down to that 690, like we've been trading this last 3 weeks, then yes, those previous low levels, they're gonna matter because it's relatively the same. We're trading within these same levels. If it was a resistance on Monday, it'll likely still be a resistance on Thursday. So honestly, yes, to answer that question, yeah, they do have a correlation. Like today I was watching SPY and it kept touching an old level that wasn't a gap fill. Yeah, I definitely do think that, yeah, they do have the correlation to the price action. Go on. Remember, check all three on the 10-minute chart for intraday correlation. Right. Let's go on to the next slide. Do you want to go over this?
Yeah, I'll go over it. All right. So, your pre-market correlation checklist. Before every trade, run this checklist. Use this 10-minute chart. It's a 10-minute chart. This takes 60 seconds, guys. Once you do it on a daily basis, it shouldn't take longer than 60 seconds. Realistically, you're just looking at where price is in comparison to the VWAP bands, to the clouds, right? So very simple, right? Okay. Checklist, 10-minute chart. Step 1, SPY and Q. These must align or do not trade. So, the first thing are you asking yourself is, are both above or below their VWAP middle line, right? If they're above, the buyers are in control. If they're below, the sellers are in control. Are they both in the green/red arc cloud, right? Is it touching the cloud? Is it touching the middle VWAP band? And is it above or below it? That's what you're looking for, guys, right? And are they moving in the same direction? If SPY doesn't agree, stop here. Do not trade, right? You're going to save yourself from a bunch of low probable trades. So, step number 2 in our checklist, VIX below 25, preferred for better risk to reward. Is VIX moving inverse to the market as it should be? Remember, high VIX equals expensive options, and that equals worse risk to reward. The ideal level that we want to be trading at is anywhere, 15 and 18. That's where I like trading between, but obviously anything below 15 is very easy and the market to go harden, right? Pause. So, step number 3, check your watch list stocks, 10-minute chart. Check all 6 core stocks, Apple, NVDA, AMD, PLTR, Tesla, plus your 4 custom stocks that you get from pre-market with Rich, and then you're checking if 3 to 4 plus stocks are moving with SPY and QQQ direction, and if your 3 to 4 plus stocks are above or below the middle VWAP line and agreeing with SPY and QQQ. This adds confidence but isn't required. Remember, the more things that you can look for in correlation within the market, the higher probable trade you have. Like I mentioned before, it should be like lack of confidence in your trade, in the setup that you're looking at. So, more individual stocks confirming equals higher confidence, but not mandatory, right? So, step 4, check key levels, optional confirmation. Are SPY to respecting previous day low, or are the individual stocks confirming the same levels? Have but not required for SPY QQQ setup is clean, right? If SPY and QQQ setup is clean. Okay, the matrix. So, SPY and QQQ are aligned and VIX is confirming this equals a green light, right? You can trade. When there's above 3 to 4 stocks confirming, this equals high confidence, a better trade. And when 6 plus stocks, individual stocks are confirming, this equals maximum confidence, best trade. If SPY and QQQ are not aligned, this is a red light. Don't trade, period. Feel me? Okay. Want to do this?
Feel me? Yeah. How these stocks move compared to SPY and QQQ patterns, right? Understanding how each stock typically moves relative to the stock market, right? Relative to Q, right? If you see that there's strength in the market in a specific sector, you have to note the strength and potentially find the opportunity in that strength and find the opportunity in that sector. It's strong, right? For example, for Apple, the movement usually moves with QQQ 70 to 80% correlation with it. The beta lower than other tech, so it's more stable and predictable, and it's also very small account friendly. A lot of people with small accounts like to trade Apple options because they are less expensive compared to something like Tesla, compared to something like SNDK or MU, right? We have NVIDIA, movement, amplified QQQ moves, so higher volatility, of course. NVIDIA is a very big market mover, guys. Very big market mover. If NVIDIA moves, the market will move. 5 trillion market cap. It's the biggest thing in the market. It really gives you the whole tell for tech. All right. Now the beta here is 1.52x QQQ move. So if QQQ is like, let's say, up 2% on the day or down 2% on the day, then NVIDIA could often be up, half 4%, double it, right? Roughly double it. Like I just said, if QQQ up 1%, NVIDIA is often up 1.5 to 2%. Watch for what to watch on NVIDIA often leads the tech sector, specifically the AI, the semiconductor sector. NVIDIA will move first, others will follow. Now, AMD is one of the ones that will follow NVIDIA. A lot of other ones that will follow NVIDIA, but I'm not going to give you guys the basket. I'm going to save it for the premium. Hello. AMD movement follows NVIDIA closely. It's a chip sector twin. Similar to NVIDIA, very volatile. What did we watch for on this? We confirm chip sector strength. So now if the semis are all getting strength, NVIDIA, AMD, Avgo, TSM, to say a few, if they're all moving together, this is a very strong signal. This is very strong correlation, right? Now, Palantir, so the movement is a high beta growth stock, right? High beta growth stocks have exaggerated moves, right? Trades very volatile. The big here is it trades 1.5 to 2.5 times against the market, right? So very volatile. If the market is up 2%, Palantir will likely be up, let's say 5%, 6%, something like that, right? Watch for we're using this as a momentum gauge. Palantir is another one that's very nice for medium-sized to small accounts, right? If you had a $2,000 account, Palantir can be a very nice mover, but also can have these extreme momentum moves. I think last week we saw Palantir move straight up, pretty much all day, have an algo day up. I think it moved like almost 7-8 points up in a day. And now, if you caught that on the upside on options, you would have gotten paid very, very, very. Right now, Tesla is highly independent, very news driven, has its own personality. It's news and Elon driven, right? If Elon says something in the middle of the day, whether it's bullish or bearish, can move Tesla like that. Tesla is one of those stocks that it could be dumping. Tesla could be ripping. It has a mind of its own. Same with QQQ. It doesn't really move with everything. Like I said, it kind of trades by itself. Obviously, they'll have its days where everything is correlating. It 2 to 3 times against the market. Usually, you have these extreme price swings. So now, let's say Tesla's market's 2%. Tesla could be down 6-7%, right? What do we watch for here? It's less reliable for market correlation. I would say use as a sentiment gauge for higher risk stocks, but at the same time, you have to know the of and really understand Tesla it cycles just like how Bitcoin does, in my opinion. Right? We have these huge movers, these huge month-long moves, and then we have some 2-month, 3-month long consolidation, and we're in that consolidation right now. I'll go into that further. Let's get to the next slide. When to stay away, guys? Divergent signals. So divergence is just a fancy fucking word for danger, right? When stocks disagree on direction, equals no consensus, there's no clear decision to be made, it leads to unpredictable moves, and this is when you want to stay out of the market. Now, red flag scenarios these are some do not trade scenarios. Now, this typical SPY and QQQ divergence. SPY's bullish, but QQQ is bearish, or vice versa. Market can't decide which way it wants to go. You skip the setups, or maybe you walk away, or you come back later. Watch for maybe an hour later, you'll see the real move. Maybe 2 hours. Maybe it happens in the afternoon. Sometimes, some days you really need to be patient with it. Then you have mixed VWAP signals. Half of the stocks in your watch list are trading above VWAP, and then half of them are trading below. No agreement. And in my opinion, I would skip that trade. Another one is cloud color mismatch, right? Some stocks are trading over the green clouds, and other stocks are trading in a bearish trend under the clouds, right? Conflicting trends, I'd want to sit out. Or if I'm confident, then you get into a high risk trade. But in my opinion, if the indexes are diverging and the stocks in the same sector are diverging, then it's a hard trade, and you don't want to take hard trades. You want to take easy trades that start working immediately, not higher risk ones that are kind of boring. Those are how you lose money. VIX not firming, market up, but VIX also up, which should be inverse, which equals uncertainty. Like I was saying before, sometimes we have an FOMC Jerome Powell event coming out to talk on Wednesday, and it's Tuesday or Monday, and the market's ripping, but so is VIX. VIX is also pushing up. This is because we have a highly volatile event later that week, and start pricing that in. Now, when you see this, it could also kind of QQQ traders because they're used to it being inverted, and if it's not, then it's a divergence, and maybe you want to sit out. Levels not holding, previous day high, previous day low, breaking on some stocks, holding on others, inconsistent trends you want to skip. Individual stocks going rogue, Apple, NVDA moving opposite to the market. Something's wrong, maybe they're pricing in news, but let's say the whole market's dumping and NVIDIA are green and ripping, pushing up, right? You don't, not necessarily that you don't want to be long, because you could be scalping. You could be scalping the long side, or you could be scalping the market short, right? But you wouldn't want to be taking like any trades, in my opinion, right? You wouldn't want to be taking any. You wouldn't want to short. You wouldn't want to short them, anticipating that they're gonna follow the overall market, because sometimes they go rogue and they have the days where they just continue straight up and completely inverse the overall market, right? The patience rule. Missing a mediocre setup is better than taking a bad one. Forcing those trades or having those trades where sometimes you have to work for it a little extra, staying in a little longer for it to work out. Listen, they happen, and in my opinion, they're always going to happen sometimes, but it's best if you can get in the habit of making those trades happen less and getting in those good habits and spotting those better trades that start working instantly. Now, plenty of trades that I've taken that go 3, 4, 500%, I've been down 20, 30, 40% on before they started to work. And now that I'm okay with that. But some traders and people, that's not in their risk management, they can't afford that. You will have to fight for the trade if you know you're raw, if you know you're right. But sometimes, and the time when you get into a trade, maybe you'll go down 5, 10%, and then it'll work instantly. Those are those A+ setups, right? Those are those easier trades that you want to capitalize on, that you want to really have those consistent entries on all the time. Let's go into the next slide. You want to get it?
Yeah. So, example, high correlation setup, perfect setup. Here's what a high probable trade looks like across all 8 stocks on the 10-minute chart. So, bullish example setup, 10 a.m. after you wait the first 30 minutes, waiting for a clear decision in the market, waiting for the amateur move to get out the way. You're going to be looking first at SPY on the 10-minute. Example of this example is price is above the middle VWAP line, right? That equates to buyers being in control. It's trading in the green arc cloud or above it. You bounces off the previous day low at 9:45, confirming the level, right? And you have strong volume on the bounces, right? Anytime it comes and bounces back up, that buying volume increases from the previous buying volume. Then you have your QQQ analysis on the 10-minute chart. Let's say you look at QQQ and prices above the middle VWAP line. That's indicating to you that buyers are also in control, showing you correlation. Let's say it's trading in the green arc cloud, right? Or a bit. And also bounced off of previous day low at the same time as SPY, and it's moving in perfect sync with SPY. Two bullish, very confluences that you are looking out for. These are going to be the characteristics of where price is compared to the clouds and the VWAP and our levels, right? The next thing that you're going to be looking at is VIX. Let's say VIX is at 18. This is a normal range. It's not elevated. And it dropped when SPY and QQQ bounced. That's a perfect correlation. And option prices are reasonable. There's a good risk to reward in this type of market when VIX is trading at 18, right? Next, you're going to look at your individual stocks. Apple, NVIDIA, AMD, PLTR, Tesla, right? So all 5 above are above their middle VWAP lines, indicating to you that buyers are in control across all stocks. All 5 are in the green clouds or above. All 5 have bounced at the same time as SPY, and there is strong volume confirming the bounce, right? When you see all of this together, what's your trade decision, right? All 8 stocks are aligned on the 10-minute. This equals bullish confirmation. Buy SPY call options at the bounce with high confidence. You can target the upper band and your stop below previous day low. If you see price start to trade above the top VWAP band and start using it as a support, you can hold that trade until you see it cross back low, anticipating that it's coming to test that middle VWAP band and cloud, right? So VIX at 18 equals reasonable premiums, excellent risk to reward ratio, especially on those bounces, guys, right? When we have a market that chooses when we're in a market that chooses a trend clearly from the beginning of the day, these are the best days to trade, right? Like we always say, we're momentum traders. You're trading the expansion of the cloud, right? So let's see here. Real example, low correlation. These are the trades that you're going to want to skip, right? Let's say you're analyzing the market after the first 30 minutes and you see these things, stay away. So poor correlation, skip the trade. Here's why low probability setup, here's what low probability setups look like on the 10-minute chart. These are the trades that lose money, right? The last thing you want to do is lose money in a low probable market. So, fixed setup example. Let's say you look at your SPY on the 10-minute, prices above the VWAP line, right? Buyers are in control, trading in or above the ARC cloud, looks bullish on its own, right? Let's say you're just looking at SPY, it looks bullish, right? Then you flip over to Qs and prices below the middle VWAP line, it's telling you that sellers are in control and trading in a red ARC cloud or below it, right? So you already have SPY and QQQ telling you the opposite things. This is divergence from SPY. This is a buyers versus sellers conflict. You want to stay away, right? Let's say you take a look at your VIX and VIX is at 28. There's high fear and uncertainty, right? You have markets not correlating. You have VIX super high, right? While SPY is trying to go up, not inverting properly, right? So it's showing you another divergence. Then you have option premiums are expensive, terrible risk to reward. Would need to pay $6 for an option that should cost $250 or 250 cents, right? And then you flip over to your individual stocks, and Apple is trading above the middle VWAP line, NVIDIA is trading below it, AMD is trading below it, Palantir is choppy, crossing above and below the VWAP line, no clear control. Tesla's down 2% on the news, not following the market at all. This is mixed buyer/sellers control everywhere. What is your trade decision when you see the market like this? No clear correlation, stay out. SPY shows buyers in control, but QQQ shows sellers in control. VIX is elevated at 28. That equals high fear plus expensive premiums, which also equals awful risk to reward. Your tech stocks, QQQ bearish, while SPY is bullish, no agreement. Mixed VWAP positions, no clear institutional direction. Skip this trade, wait for better correlation, plus lower VIX for better risk to reward, and a more predictable market. You went over this?
Yeah. Yeah, we dodge SPX a lot, but we're not gonna. This is just to touch on that real quick. This is the beginner classes. We're never gonna recommend SPX for beginners because, in my opinion, SPX could it'll blow you up if you don't know what you're doing because very expensive. And we recommend everyone to trade SPY and QQQ first and build that consistency before you start touching SPX because SPX is much more expensive, higher premium, higher risk instrument, and that we trade rather than SPY. So yeah, go back to the slide. We gotta save that sauce for the players. You dig? All right, slide are we on? We're on 14, right?
Yes,
15.
sir. Yeah. We're on slide updated pre-market routine with correlation.
Okay, let's updated pre-market routine with correlation. Guys, if you are not living under a rock, you are waking up, brushing your teeth, and listening to pre-market with Rich. It's very simple. Now, listen, I know Monday, Tuesday, and today you didn't get them, but you survived. But listen, you joined the pre-market with Rich in the morning, right? To really understand what's going on in the market, your plan, levels, and everything. Right. The complete pre-market workflow is this: incorporating all 9 classes, everything we've learned from the 9 classes, your daily watch list, and we're watching and we're trading on the 10-minute chart. Right now, sometimes when you're trading 0 DTEs, you gotta get on the 2-minute, you gotta get on the 3-minute, 5-minute, 1-minute, whatever it is. You gotta get in the lower time frame sometimes to get to get the entry, to sniper entries, or to really get the exits on point. But let's get into it. So the pre-market checklist, 8 to 9:30. This is what I do. Number one, you join the pre-market analysis class at 9 o'clock. Listen to which stocks we're discussing for the day. Listen to the VIX levels that I give out. Listen to the SPY levels, the QQQ levels that I give out, right? Those are crucial. If we go in the free chat today and you look at what I said, I think I said it at 8:30, 8:45, maybe 8:50. I don't know. Bulls wanted VIX under 22, and the market will risk. Bears wanted over 24. Right? Wait for VIX to either break over 24, break under 22, see direction and attack. And we saw that nice upside move today, right? Opened up at 681 and high of 687 today. And what did VIX do, guys? What did VIX do? VIX came down to what? 20.5. So you write down your levels, write down the 4 stocks that are most active and in play that we're watching. These become your custom watch list for today and maybe the week. Step 2, open all 12 charts on the 5-minute or 10-minute time frame. SPY, QQQ, VIX on the top row next to each other. SPY, QQQ, VIX, IWM, DIA, all the indexes on your chart next to each other because those are the overall markets. Now, if you want to add IWM and DIA in there, I do because it, overall market, the Russell 2000 and the Dow Jones, those are all two indexes, right? Apple, AMD, Palantir, Tesla on the middle row, and the 4 custom stocks that we're watching for that week on the bottom, right? Usually the ones that you see on the Sunday Rich call, the Sunday watch list thing that I drop. Hello, I'm getting tired. Sorry. All on the 10-minute chart for intraday correlation, right? 5-10-minute chart to watch them, right? And you're looking, if you see a trend, you attack. Very simple. Step 3, you mark levels on each stock. Previous day high, previous day low, very important. Previous day close as well on all 12 stocks. Check for gaps, mark the gap levels, mark the nearest psychological levels as well, because that is where liquidity lies, as those psych levels as well as those previous day high levels and the gap levels, right? Very simple. Step number 4 is the VWAP and cloud check, 10-minute time frame. Priority are this is how you're thinking. Are SPY and QQ aligned, trading over or under the middle VWAP line? Are they in sync? Both above, buyers are in control. Both below, sellers are in control. They must agree. They must both be in sync with each other, right? Which other stocks are confirming SPY and QQQ's direction? Which stocks are trading above the green clouds? Or which stocks are trading below the red clouds? Whichever the direction is. Your job as a fucking trader is to identify the direction and then capitalize on the move, right? And the tools that we teach you are how you find your entry to capitalize, and then how to overall identify what's going on. Right? That's what tools that we're giving you. And you count how many of your 10 individual stocks are confirming SPY and QQQ's direction. Right. Step number 5 is the correlation assessment. Must SPY and QQ aligned? If no, sit out. If VIX is below 25 or if VIX is below 20 and inverting with the market, right? As long as SPY is going up and VIX is going down, right? You're seeing that inversion, or vice versa. As long as SPY is going down and VIX is going up, you're seeing the inversion. Check VIX for option premium impacts. If VIX is high, there's going to be a worse risk to reward on the options contracts, right? How many watch list stocks are confirming? 3 to 4 is good. 6+ is excellent. Excellent. Make a note of high, medium, low correlation, as well as your VIX levels for the day. But the note for high, medium, low correlation that you make throughout the day, that's with the chat. That's with us, right? We're trading as a team. In our capital, when you see, we're spotting out the correlation together as a team. So sometimes if I'm looking at 16 stocks, 20 stocks, right? Maybe you're looking at 5 stocks that I'm not looking at, but you could help me look at them as well, right? You get what I'm saying? All eyes are looking at, or you're looking at the same 5 stocks or 12 stocks that I'm looking at, and we're all looking at the same things and looking for the same trades, right? So number 6, the game plan. If SPY and QQ is aligned and VIX is trading below 25, right, or 20, identify the 2 to 3 setups with confluence, right? Identify 2 to 3 setups with confluence that you are looking for, right? Whether it's bounce off the cloud or against the cloud, and you're looking for calls or you're looking for puts. You're finding your setups. We know our entry criteria. Look back in the other videos if you don't know. More stocks confirming equals increased position size confidence. So now if everything is pushing up very aggressively, then you can instantly, that first buy, go full size, right? Now if SPY and QQQ is not aligned, or VIX is above 25 and SPY and up, or VIX is pushing up, sit out or trade with a small size, right? If you're usually trading with $1,000, trade with 200. Trade with a size that's going to make you an emotionless person, because you cannot, you know what I mean? You have to, taking a risky trade, you have to be okay with it going, in my opinion, if you're taking a risky trade, you need to be okay with it going negative 50%, right? Settle at key confluence zones on your best setups. So now this total pre-market analysis takes you 40 minutes. Really just, you got to join that pre-market call and look at the stocks that we're looking at. Have the charts ready and open. Don't just listen to it on your phone while you're scrolling TikTok, sitting on the shitter, sitting in bed, laying down. No, get in front of your computer, lock in, look at the stocks while I'm speaking, right? So you could start looking and seeing what I'm seeing, right? And this is gonna help you know what's moving today, who's in control, and what's your exact game plan. Hello.
Hello. Said, bro. Well said. Like literally, sometimes all you have to do is just hop on that pre-market with Rich, have your stocks up, the levels that he's talking about, mark them on your chart, and guidance that we provide here, you guys always know what's going on, who's in control. Hello. Let's see. Okay. Um Next slide here. Common correlation mistakes. Avoid these costly mistakes. Even experienced traders fall into these traps. So it's very important to be aware of these things, guys, right? So, mistake number 1, trading SPY alone. SPY looks good. I'm going in, but you didn't check VIX or individual stocks. Then you lose because the border market was diverging. Fix. Always check all 8 stocks before any trade. You're going to be knowing what's going on with all the stocks, and if you guys are in our call. But let you're trading alone, don't be only looking at one stock. You need to look for everything for correlation. Like taking low probable trades. But besides that, mistake number 2 is ignoring VIX, right? Market looks bullish, but VIX is spiking. You trade anyway. Result, choppy whipsaw and losses. How do you fix this? If VIX is above 25, reduce size or sit out entirely. Mistake number 3, trading against Q. Apple looks great, but QQQ is crashing. Since Apple correlates 70 to 80% with QQQ, your trade likely fails. Fix, never trade individual tech stocks against the QQQ trend, right? Mistake number 4 is forcing trades on low correlation days. Only 3 stocks agree, but you trade anyways because you need to make money today. This is how you lose money. One of the only rules that I have left on my whiteboard is don't be emotional, right? And one of the other ones is don't make it about the money. So, if you make it about I need to make money today, you're already going into it with the wrong psychology. And this can force you to take bad trades on low correlation days. How do you fix this? Develop patience. Wait for 5+ stocks to align or don't trade, right? You're either sitting there waiting for everything to align or you just sit out for the day. Staying cash is always a position, guys. This game isn't only about offense, but it's also about defense. Defense is what's going to that longevity in this. Okay. 5, not rechecking correlation intraday. You're going to want to be looking at it on every single 10-minute close. You're going to be looking at all 8 stocks, 10 stocks, 12 stocks, right? So, morning correlation was good, so you assume it stays good all day. By afternoon, everything is diverging and your trade fails. Fix, recheck correlation every 2 to 3 hours. I would say it's important for even every minutes. Realistically, if you're in a trade, you should be looking at it, especially if it is a scalp, right? Don't be like Cuss or Bang. Don't to the shower in the middle of the trade like this morning. Oh man, I'm sorry. Okay. All right. Mistake 6, trusting one stock signal. NVDA broke out, but everything else is flat. You chase NVDA and it reverses instantly. What's the fix? Required confirmation on multiple stocks, 3+ minimum, before taking that trade. All right. Boom. Oh man, you want to take it away here?
With what? With the last slide?
Yeah, yeah.
Key takeaways. Oh man, this is all right. Say less. All right, let's speed run. So, monitor 12 stocks, 8 core stocks: SPY, QQ, VIX, Apple, NVIDIA, AMD, Palantir, Tesla, plus 4 daily pre-market stocks that I watch. Join the pre-market classes. Facts. Attend the pre-market analysis class daily. We do that all the time, unless don't. The time we're always doing them. Hello. So I can add those four that I'm watching, whether it's on the watch list from Sunday or whether it's what I'm talking about in the morning. Keep those on your watch list. Spying through alignment is #1 priority. If they don't agree, do not trade. Use a 10-minute chart to check correlation. Check VWAP, the middle line, not the bands. Above, buyers are in control. Below, sellers are in control. SPY is equals overall market. Overall market. QQQ equals tech sector. Both must be aligned to trade, to have a high probability trade. Individual stocks add confluence but aren't required if SPY and QQQ setup is clean. VIX ranges below 15 equals low complacency and a steady market. 15 to 25 is medium market, right? And above 25 is high fear, high volatile market, right? VIX inverse the market. Rising VIX equals fear equals stay cautious, right? High VIX equals expensive option premiums, so you have to be careful when VIX is trading over 25. High option premiums mean a worse risk to reward ratio. You need bigger moves to profit on your option, right? A $5 move that would likely give you 300% would only give you, like 70 to 80%, right? A low VIX equals cheap premiums. Best time to trade for optimal risk to reward. That's when we usually catch those, $1 to $5 trades, 400 percenters, right? Check types of correlation on the 10-minute, arc clouds, VWAP, and key levels. Previous day high, previous day low, previous day close, psychological levels, and so on and so forth. Green light is if SPY and QQ is aligned and VIX is confirming, can trade even without all individuals. High confidence is above, so is SPY and QQ aligned and VIX confirming, as well as 3 to 4 individual names confirming as well. Max confidence is the same, like I just said, but 6 individual stocks confirming. Red light is if SPY and QQ are not aligned, there's no trade regardless of individual stocks, unless you're looking at an individual stock and only to get in and out of that day, whatever. Apple with QQQ 70 to 80% of the time. It's stable and predictable. NVDA and AMD amplify QQQ's moves 1.5 to 2 times. Often the lead stocks in the tech sector. Palantir and Tesla are high beta stocks. Big stocks. They move. They a lot of the times they have minds of their own. Especially Tesla moves by itself. Whatever. Your 4 custom stocks from pre-market class give context on what's moving that week or that day, right? Lately, we've been seeing oil's been hot because of all this war news and everything, so on and so forth. We were the themes and we're trade the themes, right? The themes is where the volume is, and the volume is where the opportunity is. Divergence, SPY and QQ doing opposite things. Skip setups or play very tightly, if you know what I mean. Play very with a tight stop loss. Run correlation checklist on 10-minute chart every trade. Take 60 seconds. If everything is correlating, then it's a high probable setup. If everything's not correlating, it's not a high probable setup, and you will have to be very cautious if you're going to take the trade and continue and take it. Whatever. Recheck every 1 to 2 hours. It changes throughout the days, and if you could see that exhaustion and correlation start to change, and everything's the upside then starts to flatten out, and then everything starts pushing down and still correlating down, you can catch those very nice reversal setups. It's throughout the day, all you care about is if things are correlating, right? Missing setups beats taking bad ones. Patience wins, right? Pre-market 15-minute class and your own 25 personal prep. Just join the pre-market with Rich. Have your laptop and your screens in front of you. Have your charting have your charts open. You have your charts ready. Flip through the stocks with me. Write those levels down with me. See what I'm seeing. And yeah, VWAP middle line tells you institutional direction, who has control right now. If price is trading over VWAP, then bulls are in control. If price is trading under VWAP, then bears are in control. Practice correlation analysis every day on the 10-minute chart for 1 week, and you will see, it says before adding it to live trading, but practice it every day. Find the correlation. Find if things are ripping together or dumping together, and it'll the picture will be so much clearer to take these trades. That's everything. It's 10 o'clock. I just fucking drove 5 hours, did the class because I love y'all. I want to see everybody win W class, guys. I hope you guys learned something. It was an awesome class. Listen, I know I rambled a lot. Class started at 8:30. It's 10. It's an hour and a half. But guys, Everything I say is 7 years of experience speaking. It's thousands of dollars lost. It's hundreds of thousands of dollars made. It's real raw experience. It's thousands of contracts traded.
Thousands.
Probably tens of thousands, really. Like, you know what I'm saying? I want everybody to win, man. I want everybody to win W class. I mean, I don't really have anything else to say. Let's end that shit with a prayer, man. W class, Angel, good shit, man. And
Yeah,
I
bro.
appreciate, real quick, shout out to Angel, guys, and I apologize for everybody for the absence the last 2 days. Listen, I'm back. We're back outside. Pre-market with Rich, 9 o'clock sharp. Be there, be square, man. Be there or be square, man. Very simple. But thank you for holding it down the past 2 days, and shout out to the team. I don't know if the team's watching or in this class right now, but shout out to you got Bern in here, you got Paul in here, there's Andrew in here. Shout out to everybody who's been on the calls holding it down for the team, man.
Shout out Chapo. Hello.
Shout out to Chapo. Shout out to everybody, man. Shout out to everybody. It's Chapo and shout out Chapo.
Come on
Chapo's
now.
in here.
He's always in here.
Always, man, with the perico, man. I appreciate everybody for and I like that how the chat is getting comfortable with the team now. Everybody and getting really feeling each other. It's good for them to really see the team, because this is the people I've been trading with for the last 5, 6, 7 years, really. So shout out to the team we have. Shout out to Angel for holding it down, and I cannot wait to do this pre-market with Rich and to be on the live call tomorrow and print with everybody, man.
Yes, sir.
Yeah.
Let's end it with some prayer, man. There's no questions tonight. Everything was very, very. We went through everything extensively. As you guys know, there's 13 classes. We are on class 9, so there's 4 classes left of this beginner series, right? So after this, it's gonna get real, right? Hello. So again, guys, these classes just build upon each other, and it's just good to have a good foundation to your system, right? So let's get right into the prayer, guys.
Real quick, once we do finish these last 12 classes, we got three more classes left.
Yeah, we have 4 classes
left, guys. We are going premium only. I think we're gonna do it next week. Yeah, next week, because next week is gonna end Thursday. So, oh man, we're going premium only next week, guys. So, guys, lock in. Book a call with me and Angel to lock in, and let's get you guys rocking, man. Everybody who we've had so far is really crushing it, and I love to see everybody's progress. Yeah, I see you, and I'll get back to everybody after class, man. What looks like me? That does not look like me, yo. That's crazy.
What that is crazy. That's violation. Alright.
Let's get into that prayer, man.
Alright, bet. Dear Heavenly Father, I just want to thank you so, Lord, for guiding all these classes. I just want to thank you for giving us such a clear vision for what we want to present to our students, and just giving us the guidance on a daily basis with all the opportunity that you present to us in the market, Lord. I ask you to continue to guide these students and give them the consistency, the discipline, and the patience that they need to achieve longevity in this journey. We know that the for people to become profitable is very, very low, but it's because 99% of people don't have what it takes to show up every day, even when making the progress that they think they need to be making. So I just ask you to continue to guide us with patience. In Jesus' name I pray. Amen.
Amen.
Yes, guys. Hello.
Amen.
I hope everyone feels a little bit more ready for tomorrow. You feel like you understand the market a little bit better, feel a little bit more confident going into tomorrow, guys. Day that you guys join these classes and truly take everything in that we're saying should give more confidence in being able to take those higher probable setups and, patience, understanding why we're maybe waiting to get into the trade, or DM it to me, Danny. You already know, guys. Hello, I'm ready to full port test the calls too. Let's do it.
And guys, if you guys want to book a call, just either add us in the chat and we'll DM you, or send us a friend request. Don't fall for any scammers. You guys know our accounts. Don't be dumb. Just send us.
If anything, just ask for a voice message, and if they can't say hello, coffee.
What? Or get us on Instagram. Everyone pretty much follows us on Instagram from here, so I gotta follow everybody back too, man. I gotta work on my follower list.
We gotta do a little ARC IG group chat when there's any news that comes out that they want to share. No. If you send memes, you're banned. Only news in market-oriented stuff. Hello.
Hello.
I need to take away the chat from the video now. All right, I'm gonna end the video. Matter of fact.